I'm joined by my colleague Karen Manczko, who will provide the update for the Wespath fund performance. Karen, thank you for being here.
Thanks, Joe, and greetings to everyone from Glenview, Illinois.
I've mentioned that the markets and economic signals were mixed in the second quarter. Would you say the same?
Definitely. I know that you and Dave explored the headlines in detail, but I saw softer inflation numbers in May, and therefore the Fed took a rate hike pause in June. Still, consumer spending has been resilient, and the economy continues to add jobs. With all this in the background, the U.S. equity markets were up 8% in the quarter, and international markets were up over 2%.
So given the positive equity markets, how did the Wespath equity funds perform?
You can see that the Wespath equity funds ended the quarter in positive territory, with both the U.S. and international equity fund composites up 7.4% and 1.8% net of all fees. The positive absolute performance reflects the strong overall U.S. equity market I just mentioned. However, on a relative basis, the composites did underperform their respective benchmarks by a little more than 61 basis points and 96 basis points, respectively. I'll review the specific contributors and detractors to our quarterly fund performance in a moment.
All right, so positive absolute performance in equities, but it looks like the fixed income assets were down for the quarter, which I assume is where your mixed results comment comes in.
Exactly. The stock market showed much more optimism than the bond market this quarter. What primarily impacted the bond market is that we saw the yield curve shift higher the last few months. As our viewers are aware, when yields go up, the price of bonds go down. Therefore, with the uptick in the yield curve, we saw the U.S. bond market down about 1%. On the positive side, despite the overall bond market being down in the quarter, you can see on the chart that our fixed income fund composite ended the quarter up 2 basis points. Meanwhile, the inflation protection fund composite ended the second quarter modestly negative, but did outperform on a relative basis. So all in all, the fixed income side, both composites outperformed their respective benchmarks by 59 basis points to 126 basis points net of all fees.
Thanks, Karen. Before you talk about the specific contributors and detractors, let's get a sense of how we did compared to the rest of the industry. Can you tell us how the multiple asset fund compared relative to other balanced funds?
Sure thing. This chart showcases the multiple asset fund composite versus a universe of balanced funds. This slide measures how our balanced fund composite performed relative to other balanced portfolios and funds that are currently on the market. Looking at the chart, you can see that the multiple asset fund composite has performed in line or above the median across all time periods. For instance, for the 10-year time horizon, the multiple asset fund composite outperformed 60% of its peers.
Great, thanks for that, Karen. It's always good to check in on how we stand up against versus our peers. Now let's talk about those contributors and detractors. Can you break down what hurt and helped the funds in the second quarter?
On a gross of fees basis, the multiple asset fund outperformed by 7 basis points in the second quarter. The contributor to the gross of fee relative performance was the outperformance of the fixed income fund and inflation protection fund. On the other hand, the equity funds detracted from relative performance due to the underperformance I mentioned earlier.
Thank you, Karen. So we had sluggish performance from the fixed income funds on an absolute basis, but those outperformed on a relative basis. And the equity funds were up but underperformed their benchmarks. Can you dig into that a little more?
Yeah, sounds good, Joe. Starting with the U.S. equity fund, this fund underperformed its benchmark by 44 basis points for the quarter. Starting with a review regarding what contributed to the performance. First, strong stock selection by our active managers in technology, healthcare, and industrials contributed to the performance. Our investment managers' investments in companies like Supermicro, which is an IT solution provider that designs and builds environmentally friendly and energy-saving portfolio of servers and storage systems, was up 134% in the second quarter. Another example of a company that did well is Intuitive Surgical. This stock returned 34% and is a company that creates robotic-assisted surgical systems. Lastly, excluding tobacco and defense companies was a contributor for the quarter.
In my market update, I discussed the impact of the Super 7, or large technology companies that accounted for most of the gains in the U.S. stock market year to date. How much of the U.S. equity fund is invested in these names, and what impact did it have on the fund's performance?
Interesting timing with that question, Joe, as I was just getting ready to review the other side of the slide, which are the detractors. Yes, 7 stocks accounted for 65% of the total market return. These names are Apple, Microsoft, Alphabet, Amazon, NVIDIA, Tesla, and Meta. Names that we continue to hear over and over. We are invested in these names, but the weighting in our fund in these stocks is less than the benchmark. And this is primarily where that mega cap stock underweight comes into play. And the impact it had on the performance, being underweight these names, was a detractor. Some of these 7 stocks returned 190% and 138%. And I know some watching may be asking themselves, why did these names do so well this quarter? Well, they did well for varying reasons, including customer satisfaction, as in the case for Apple and Tesla, or an expansion into AI technology. It is worth noting that the large cap stocks outside of these mega cap names actually underperformed our fund's benchmark in the Russell 3000. So if we take all of the large cap stocks and remove those mega caps I just mentioned, the fund's large cap underweight was actually a contributor to performance.
So Karen, AI was definitely a prominent economic factor at the moment. It's something that I mentioned in my market update and we'll be discussing with Dave later in this webinar. So it's certainly on people's minds. Are there any other comments on the U.S. equity fund before we move on?
I have a few final comments. The fund's modest allocation to private equity and private real estate also detracted due to the strong U.S. public market and these strategies not being able to keep pace due to their lag. Finally, the fund's underweight to small and mid-cap stocks detracted as they underperformed the mega-cap stocks that I highlighted a moment ago.
You mentioned that the International Equity Fund underperformed the benchmark for the quarter. What were the drivers of the International Equity Fund's relative performance?
The International Equity Fund underperformed by 40 basis points. And the primary reason for the underperformance was stock selection by our fund's active managers, particularly in consumer discretionary, healthcare, industrials, and materials. An example is the online retailer Zalando, which was down 30%.
Great, thanks for highlighting that. Now let's talk about bonds and the 2 fixed income funds and how they performed on the quarter.
The fixed income fund outperformed by 77 basis points for the second quarter. This was a risk-on quarter, meaning investors were more interested in the riskier corners of the market. Therefore, the fund's allocation to emerging market debt and manager issue selection in that style contributed positively, along with the manager's allocation to high-yield bonds coupled with that manager's issue selection too. Finally, the fund's Core Plus manager PIMCO also had strong issue selection, particularly being underweight UK bonds and overweight credit as we saw spreads tighten during the quarter.
Any detractors to the fund worth commenting on?
What detracted from the fund's performance was the global bond manager's issue selection. The manager was overweight the short end of the yield curve, and we saw rates rise, which impacted bonds negatively.
And then what affected our final fund to talk about today, the Inflation Protection Fund?
The Inflation Protection Fund outperformed by 143 basis points for the quarter. The fund's overweight allocation to global and emerging market inflation-linked bonds contributed, along with the fund's allocation to floating rate senior secured loans, as we saw rates rise during the quarter.
So Karen, thank you for that performance summary. We appreciate your time.
Thanks, Joe.